So, welcome back to the Property and Policies edition of the Wilton Report. I am Josh Wilton, and welcome back to our Wednesday live session. And thank you in advance for tuning in. Tonight, we're going to take a little bit of a different approach. We generally interview policy makers on this segment of the program. Tonight, we're going to interview somebody whose business and their partnership with you, the consumer, has been affected by the policymakers. And we're going to talk to an insurance person that we work with very closely here at Princeton and the Wilton Group, which is my personal team here at Princeton. His name is Carlos Iglesia. Let me bring him on. There he is. Hello, Carlos.
Good evening, everyone. Hey, Josh. Pleasure.
How are you? So welcome to the Policy and Property edition of the Wilton Report. And we were just backstage, so chatting about tonight. So generally speaking, as I was saying earlier before I brought you on this segment of the Wilton Report, we usually have policy makers. We have mayors, we have different folks who come on and talk about things that they do that impact housing policy. Tonight, I thought we'd take a shift because I find all the changes that have gone on in the insurance industry fascinating. So before we get to the meat and potatoes of what we're going to talk about tonight, why don't you introduce yourself? Obviously, you know who you are, what you do, the name of your firm, and we'll jump right into it.
All right. I appreciate it again. Good evening, everyone. Josh, thanks once again for having me on. I know it's a big honor. But yeah, so my name is Carlos Iglesia. I am agency owner of Goosehead Insurance. My office is located centrally in Cranford, New Jersey. And some of you might have come across or worked with currently in the past some Goosehead agencies. We are all independently franchised owners. I tell clients it's kind of like going from town to town and walking into a different Starbucks or Dunkin' Donuts. We all, treat our agencies like a baby. But more importantly as well, too, is that we are here as a trusted partner in the real estate game. For myself, I used to be in the mortgage industry for close to 15 years before I stepped away. I started my career
Big
off
switch.
at Chase. It is. And you know what? I think I spent my first year of my agency explaining to everybody why I made that switch. And here I am doing it live on your show. So I will, try to shoot through this again. But
pat yourself on the back. You did it. You made it all the way to the big time of the Wilton Report.
Yeah. Moving up. I made it. This is why I made the switch.
That's right. To get on this podcast.
But the truth of the matter is, it's, insurance, a realtor, a lender, we are all in this industry together, and I, modestly speaking and patting myself on the back, I walked away from a good career. I started off at Chase. I was there for about 3.5 years, was with Wells Fargo for a little over 11 years and just went from, a sales agent to a sales manager to at one point running all of New Jersey and part of New York bank branch mortgage teams, and then stepped away. I stepped away right before the market shifted, and I just think timing is everything. And I just felt that what I've achieved, and where I saw the market was going, then I have one more good career, change left in me. And I have some buddies that were in the insurance industry that have been down my back for a while. And again, seeing that I wasn't stepping away and starting something brand new, I was just taking a craft of what I had and still giving back to this market over here. And so for me, I think it was an easy transition, to bring me to this day and hour right here.
That's right. So being in the insurance business, and what I wanted to talk about tonight was there's been so many changes on your side or in your segment of the business over the last few years. And we're going to talk about not only some of the national things that happened, but then we're going to kind of hone in on the Northeast and obviously New Jersey. So what are some of the shifts and what are the biggest changes you've seen in the insurance industry as it affects the consumer over the last couple of years?
I think we might have to get an extra hour on this podcast for that. But no, I just think, and again, going back to when I first, entered the mortgage industry in 2010, and here we are 16 years later, it's astronomical. I tell everyone my story, and whether I'm, working with a new loan officer or a realtor or just new clients, I make sure that I put out there first and foremost my background, which is, hey, listen, I used to be a lender for 15 years. I get it, and I know where you're at in the part of the process. And it used to be, before, and loan officers that are more tenured than I used to be, that are still doing it, everybody was telling you the same thing. Nobody thought about insurance. We knew that, our clients
Came very
needed
late
to
in the
get to the
process.
closing.
Yeah.
Yeah. We worry about income assets, sourcing large deposits, getting the title work. And then it's like, oh yeah, like, what's this hazard insurance that we see on the commitment letter? Because they don't even call it homeowners insurance. It's now you need hazard insurance. And the simplest thing used to be is, hey, call up whoever you have your auto insurance with, ask them to bundle you, and we'll call it a day. And as a loan officer, I think almost anyone that's watching this or been through the process, when you're filling out an application, you just write estimates. We don't know what property taxes are until title report comes in, and we don't know how much homeowners insurance is. But it was very easy for us to just kind of look at a house and say, okay, it's $100 a month or 150. Those days are gone.
So let's talk about why. Yeah. But let's talk about why. So let's jump down to Florida, right?
Yeah.
And because ironically, like, California is like the engine of the United States economy, and everything happens in California and comes east, right? It just seems to be that way.
Yeah.
It seems like from a national housing cycle, a lot of things happen in Florida and spread to the rest of the country. So the Champlain Towers collapse, right? So just for context, so people understand, this is 1,000 miles away from New Jersey, right? But a number of years ago, quite literally, a condo building fell down on itself and killed dozens of people, hurt dozens more, and sent a shockwave through the insurance industry. Mm-hmm. And did that single event, it seemed to really shift your business, right? And then not only did it shift your business, but it shifted the importance of insurance. And then it seems like the insurance companies did a massive amount more due diligence on every single transaction. Is that a fair statement?
Oh yeah. And I think the immediate effect, it didn't trickle over to insurance right away. Although when they looked at it, they just, that's what changed the ripple effect was changing HOAs and, what to charge, what to collect, amount of reserves. But I think the first, what it hit immediately was the lending side of it. Because when someone is, purchasing a condo or a townhouse, there's an HOA involved. And then they had to pretty much, it was like, if you had a transaction in process, I think almost everybody was delayed because they had to do their due diligence and say, hey, look, is this HOA, do they have enough for reserves? If God forbid, we end up like the Champlain Towers down in South Miami over there, And so I think the first initial effect hit loan officers and title work and making sure that all of the riders and everything for HOAs were up to date, and that everything that was on paper they did have. That's the biggest thing is that, if they don't have money to take care of these claims, then it's done, because these HOAs also need insurance as well. And some of them didn't have insurance. And that was the biggest piece behind it. Yeah.
Right.
So I think
it spread to your business, the insurance business.
Correct. Yeah. Because now
things seem to get a little more complicated from that point on.
Yeah. It's because there's more rules behind it. Now, for instance,
let's talk about what are some of those rules that you're seeing that are newer?
So there's something with HOAs. And it's one of those, a home buyer might not know it, but when your lending team is telling you, hey, look, you don't have the proper coverage, get with your insurance rep. Like, for instance, now there's something, loss assessment. Loss assessment is that, acting mean, if you want to call it that per se, that, hey, look, if you're buying a condo, the HOA is covering the roof, the exterior, and your focus is the middle. But then you have these little rifts that you might have with an HOA of, hey, look, I have a bay window and it's protruding out from, the flat wall. Who's covering this leakage? You or me? And HOAs are like, I'm not. The homeowner saying I'm not. So now you have this loss assessment that's needed now, for instance, that has to be on a policy to say, okay, look, we're going to dip into this little reserve. It's going to be on your policy. But so every HOA, for instance, has to have, they set their own, whether it's 15,000, 25, 40. But even that, before it was just have $1,000 and call it a day. But now there's a standard behind it, which sometimes clients don't find out till the day before closing, and they say, where's your loss assessment on your policy? And they're like, I never knew that, and it's not their job. At the end of the day, they're just worried about getting through those 30 days of sending documents in and getting to the closing table with you and your team and, starting the next chapter in their lives.
But it's had a massive impact on the industry because, like you said, it used to be, day before the closing, you don't have insurance, no problem. We'll pull a policy for you, right? Or somebody like an insurance person could. Those days are over. There's so much more due diligence. What are some of the steps that your company and the insurance companies that you represent and or work with on behalf of the consumer? What are some of the extra steps that they've put in place and you, by consequence, have had to put in place with the consumer?
Yeah. You know what? And that's a great question. And I'm not just saying this to because I'm here on your platform and but as you know, I work very closely with, you and your team, and you guys are great examples. And this is what, I stress is that insurance, and again, a lot of times a realtor or loan officer might have never had met an insurance agent before, because for the most part, we think of insurance, we just think of, your commercials on TV and let's get auto insurance, but when we're putting, assets and investments into our hands, it's bigger than that. And so what I stress is just the last minute stuff can't happen anymore. And I think the seasoned realtors and loan officers are understanding that you need someone like myself or any other insurance agent, or I will stress whether it's my brokers, are the way to go, and just because you don't want to call one person up and just say, hey, I'm trying to buy a house, can you get insurance? And if they say no, or it's too high, then now you're spinning your wheels and you're getting inundated with going online or whatnot. Brokers can shop the market for you. As you know, my agency has over 40 carriers, but that's the biggest thing, is that what your team does is, they'll call me, hey, look, I'm about to list this house. Can you tell me if it's in a flood zone? And if so, roughly what's hypothetical? Because a lot of times these things, are accidentally left off, of an MLS listing, or they're not put on, Zillow or realtor.com. And so when someone's buying the house and they're like, oh, wow, this is in a flood zone, and it might be more in a more severe area, then it might be, okay, I was just squeezing by and now I have to revisit. Can I afford this house, or can I even qualify at this point? So the biggest thing is
let's talk about floods. Like, that was my next question for you anyway. So New Jersey, right? The National Flood Insurance Program, right? I think we are we're in the top 5 in the country, right? For policies in that program. So why don't you explain what the National Flood Insurance policy is? Like, what is that? As explain it to a consumer, not a broker.
Gotcha. All right. So, in high level overview, as Josh mentioned, is that, we wouldn't think that Jersey is a high, again, we think Florida, for instance, but no, we have the beautiful Jersey Shore, and we just have so much that's in between. Look at this past weekend, shelter in place alerts were put off on Friday, and flood claims everywhere. My phone was blowing up with claims that have to be taken care of. So what flood is, so flood insurance is broken down into 2 different things. Every couple of years, FEMA is coming in and they are reshaping and remapping flood zones, sometimes for the good, a lot of times for the worst. And they're expanding these maps and everything. And as I tell clients, because when we're looking at quotes, they might come to me in their head and say, hey, I thought insurance was gonna be $100 a month. I'm like, yeah, 15 years ago, you're buying a $2 million house. That's not the case, and it's not, the Price is Right, where you get to name your game. Insurance isn't how great of a home buyer you are, how beautiful the house is. It's all based on risk, and that's all the actuaries care about that are, behind these insurance companies. They're going to say, okay, we're going to take a chance and insure your home for this much a year. So when it comes to flood, it's the same thing. FEMA's looking at it, okay, what is the probability based off of, the shorelines that are coming out, the natural disasters, the wind, storms, all these probabilities. And so they keep expanding over and over. And so you might be in a flood zone, however, it might not be that bad, but they're still going to take their risk and say, hey, look, part of your property is. And so from a lending standpoint,
it's not only the shore, but we have the Delaware River, right? Yeah. We have Little Brook, we have Harrisburg, we have Carnegie Lake, you have the lakes in Hopewell, you have small tributaries, which were not on the FEMA map, which are now on the FEMA map.
Yeah. I tell you, I use my house as a prime example. Where I live, I'm not in a flood zone, but you go, you come out, you go down, you make it right off my street, and a quarter mile down the road, it's a flood zone. And it's literally only like a third of a mile that is, because we have this little stream that runs through this park, and and any single flash flooding or bad, it floods out everybody there. So something like that, we think of flood, we think of, again, the shore, the coastlines, but something as small as that will wipe out. So that's the biggest thing, is that from a lending standpoint, is part of the mortgage is that they're going to say, hey, look, your home is in the flood zone. You now need flood insurance. And there is a set standard that is needed in order to close on a mortgage, which is at least $250,000 to rebuild. Obviously, we always recommend, if it's not that bad, going up higher. It covers contents. But the one thing that I'll sit here and say as well too, and going back and forth, is that we can't fight FEMA. We can't fight the National Flood Insurance Program. It's there, and whether we like it or not, it's going to keep expanding.
Right. And one of the interesting data points on the flood insurance program, the national program, is almost half of the claims come in non-flood areas. So, like, let's pretend we're a consumer here, and you're a consumer listening to this. They're in your house, and a quarter mile away is a flood area. Should they get flood insurance? Right? Does it help them make a claim? God forbid they really have a swollen creek or a swollen, river or tributary. I'm not talking the ocean or what happened in Asbury Park. Should people that are a quarter mile away, not in a floodplain, that go, you know what, I don't want to spend the extra $150, $200 a month, right, for $2,000 a year, whatever. Should these people start thinking about getting flood insurance?
Absolutely. And I think we have all, again, everything you're naming, we've all lived through it. You know what I mean? And I think the easiest one that we can just throw a dart on it and everybody can relate to is Superstorm Sandy. And whereas a lot of times we tend to think of flood as hurricanes, and I tell everybody, like, if you bring it up, there hasn't been a named hurricane that has touched down and hit Jersey in over 100 years now. And we say it, Sandy wasn't even a hurricane. By the time it hit landfall, it was a superstorm, but it still did its damage. Friday, July 3rd of 2026 did its damage. And so, yes. And that's where, and Josh, I just love that you bring that up as well too, is because I stress it, and you could probably just see like the passion in me, is that when it comes to insurance, and again, I can't control anybody's pockets, I say all the time, you really need to just sit there, and whether it's myself or don't take shortcuts. At the end of the day, I'll do what I will present to you the best option out there. But every informed listener out here or insurance agent, we always, hey, here's your home insurance, but here's the bells and whistles on the side. And just like you said too,
but this wasn't a conversation we were having 5 years ago.
Not at all.
This was not like, oh, you're a third of the mile away. You don't need it. You're not in the flood zone. Now you're like, you're pretty close. And God forbid FEMA moves the map in June, doesn't tell you don't have the right coverage. You get a flood, like you have a problem. Yeah. Like, the consumer has a real problem, and obviously it's getting more expensive. And obviously the month to month expense of insurance is not getting cheaper, right? Yeah. But all of these catastrophic events have impacts in New Jersey. So the fire in California, the Pacific Palisades fire, that had a ripple effect to the New Jersey real estate market. People couldn't understand it. I said, well, the same companies are insuring everywhere, and their job is to mitigate risk, right? So it's pretty interesting in that the FEMA maps are definitely expanding, and they're unfortunately more properties are going to be put in these floodplains under the federal statute. So New Jersey passed a flood risk disclosure law, right? It requires sellers to reveal known flood history. Has that changed how buyers now shop for coverage in any town that could be impacted by water? And like, again, we like to focus on the coast, but Denellen floods, right? Every time there's like an inch of rain, Denellen has 6 feet of water. Parts of Princeton, are prone to high water tables. So have you seen this disclosure law impact the way people shop for insurance?
Yes and no, in the sense where more realtors from a listing side and a buyer side are doing their due diligence, whether they have a buyer that wants to make an offer to say, hey, Carlos, initially, can you tell me how much they might be looking at? Or I want to list this, and I'm asking, what does it say in the seller's disclosure? Because the one caveat, and I'll put it out there, is that when it comes to flood insurance, most flood companies are not running a loss report and are relying now on this disclosure. And now there are a lot of private markets that are entering in when it comes to flood to kind of be a plan B, C, or D, because sometimes, the standard FEMA market with insurance, the NFIP, is becoming more expensive. And so these private flood carriers are in certain areas pricing very well, but it's relying on the truth behind that disclosure over there. But usually once you say, yes, there is a loss that's stated in the past 5 years, or if it's over a certain aggregate amount between total losses combined, then it's wiping them out. And we have to go back to the NFIP, which is usually priced higher. But
Right.
again,
it goes back to price.
Yeah. But going back to seller disclosure, it's doing what's right, because a lot of times, it's unfortunately, a seller could just say or do what they want, just kind of like we know, and I'm sure we'll touch upon how important roofs are right now. And it usually, like when a seller writes, how old your roof is, unknown, it's a red flag. If they can't answer that question over there.
Let's talk about that, right? So
Yeah.
let's talk to sellers and buyers here for a minute, right? If you're a seller and you made a claim on your insurance, can you tell the seller what's going to happen when you start getting the insurance policy together for the buyer of their house? Like if there was a claim on that house, you're going to see it. Can you explain that process to a seller? Like there's no hiding this.
Yeah. So we're talking about just regular claims. So we're not talking about flood now. We're talking about claims on the house.
Claims. Yep.
Yeah. So part of any insurance agent, no matter who you work for, what broker agency, in order to produce a quote to a home buyer, is you need to run what's called a clue report. And this clue report will go back 5 years. So it's kind of like getting a mortgage and pulling a credit report. A credit report is going to be run to see where your score is at, to see ultimately where you're going to end up interest rate wise. And so the same thing is done on a carrier. So the clue report, different carriers have different guidelines. Some carriers are very strict and say, hey, look, we're running they always run a report on the home buyer and the house itself. And in theory, carriers really shouldn't really be worrying about the house per se, and more worried about if you have somebody that's a repetitive claim filer that's buying a house. And some carriers are strict and saying, we're not going to take any losses in 5 years on the buyer or the house. But a lot are understanding, hey, look, this is a home buyer buying this property. It had nothing to do with whatever that previous seller did. But either way, they do a 5-year look back, and every carrier has their guidelines, how many claims they will allow in 3 or 5 years in order to do it. So if a seller is not stating certain stuff, and then I'm here saying, hey, Josh, look,
you're going to find out about it.
Yeah. I literally had this conversation last week. I just said, I just need a review on this. I said, there's a $20,000 water loss from 3 years ago that the underwriter is looking into. And he's like, what loss? So I was like, and it was very detailed. There was the water line break from underneath the fridge, which is very common as well. So that busted overnight, warped, leaked, floor, everything, but he never even knew about that. So, and things like this is great, because you want to take this back, because from an insurance standpoint, I can still provide you a quote and write you insurance because it wasn't against you. But now you want to, one up it and go back to the seller and say, hey, look, did you really take all this? Is this fixed? Is this an ongoing problem? So sellers cannot get away with not disclaiming, because whoever's buying their house, unless they're doing it in cash and not getting it, then this clue report is going to expose everything.
Even then, a lot of them pull insurance. So, and speaking to the buyer's like, well, I don't want to just rely on the seller's disclosure. It's like, don't worry, Carlos, they're going to pull it up. If there was a claim on this house, we're going to find out about it, right? So it does.
Your agents do that very well. Your agents will do that a lot. One specifically, James Jocelyn out there, if you're watching over there, yes. We
try. But again, it's part of, like, when you think about the real estate process, our job is a big part of the realtor job is due diligence, right? Like getting ahead of potential problems. So, and we're going to talk about that. So let's talk about non-renewals, right? Because non-renewals is a big thing. And if, someone watching, well, what's a non-renewal? Non-renewal is you wake up on a Wednesday morning, and I'm probably exaggerating this, Carlos, I'll let you fill in the details, and your insurance carrier says, you know what? Congratulations on being our customer of 5 years at 123 Main Street in Bananatown, New Jersey, but we're canceling your insurance. And that happens. Can you talk to what you've seen in the last 4 or 5 years? Because I know obviously the coastal counties, Cape May, Atlantic, Hudson County, Monmouth County, are getting hammered by non-renewals right now in New Jersey.
Yeah. So non-renewals can happen for lots of reasons. And we all get them. I can't, and it's for various reasons. So one common one is just like what you said too, and kind of touching upon that quote unquote coastal market over there, is that coastal doesn't necessarily mean, hey, look, I'm a block from the ocean or 2 blocks from the ocean. Coastal now means, what is an insurance carrier's risk from the proximity to water? And some are saying, hey, look, if your home is not located within 5 miles from a body of water, I'm not insuring you. So coastal is a very vague word now. It's not just Jersey Shore.
Let's just spend a second on that, right?
Yeah.
5 miles from a body of water. Like, that's a pretty big geographic spread, right? I mean, has that limited the carriers that, someone's going to buy in the Delaware, or someone's going to buy in Lake Carnegie, or someone's going to buy, in Sayreville overlooking the water, does that limit limit their choices?
It does. And that's why I say too, is that's why this world of insurance has changed so much as well too. Just being able to work with a trusted advisor that has options for you, because just like you said too, is that non-renewals might not even be tied to your house per se. Non-renewals will be like, hey, look, we just sent a letter to everybody in the zip code that we're not writing risks here. And we've seen it. A lot of the big, what we call captive carriers that we see on TV a lot, is they are very risk exposed when it comes to auto. And so homeowners is a secondary product to them. And so, they want to make sure they mitigate that risk. So a lot of these bigger carriers they don't write in Jersey City water. They don't write in Bayonne.
Think about that. Jersey City is the biggest city in the state.
They're pulling out of slowly, like the whole North Bergen, Union City area, because it's just, and it's crazy to think about, it's just, but that's what coastal now is. And so, yeah, we, all of us in the insurance world, we have clients saying, hey, look, I got a letter saying I'm not renewing, because they're not just writing in this area anymore. They just stopped because they don't want to take upon that risk. Or you get and here's a common one too, is that, and I make sure that, I tell clients, hey, look, I'm going to tell you this. I'm going to go on this whole checklist over here. I have my templates. Hopefully something sticks, but if not, don't forget to call me. But where I'm leading to as well is that if you have a roof that is 15 years old when at time of purchase, and that insurance carrier, their guidelines state that they don't do any roofs that are older than 20 years, they have that application when it's taken. So 5 years down the line, they'll come to you and say, hey, look, at time of purchase 5 years ago, it was 15, we're at 20, it's our guidelines. Have you repaired it or replaced it? And if not, I'm sorry, we can't insure you.
So let's spend some time there, right? So because again, this was really, I've been doing this for 20 years, right? This was really not a thing 5-6 years ago. This level of, I just call it like case management or detail management by the insurers, it seems to be new. They seem to be very good at it. So let's talk about the things that could trigger this. So let's talk about roofs. So let's talk to sellers for a minute, right? Well, my roof is 25 years old, but it's fine. It's working fine. It's not broken. I don't want to replace it. And I don't blame them. Who wants to spend 25 grand on a roof and move out? Buyer goes to buy it, right? Their insurance company says, don't bother applying. Like, that's literally happening right now. Like, right? And what we have to see, and what we're seeing is credits have to be dedicated and paid directly to the roofing company. It's not like the credit's going to go to the buyer, to the buyer. At the closing table, on the ALTA, which is the closing document, there's going to be a check made to the roofing company. The buyer doesn't get any discretion. The seller doesn't get any discretion. This has to happen. It was always a risk thing. But I'd say, gosh, in the last 4 or 5 years, it's like, do not pass go, do not collect $200. You're not getting insurance if your roof is over 25 years old. Doesn't matter. Is that a fair statement?
Well, all right. How would you like me to answer this, from a buyer's perspective?
Truthfully, both. Let's talk to the sellers first. Yeah.
Okay. So sellers first. Yeah. So I feel like I'm having more and more of this conversation on a daily basis. It's funny. My other agency partners like, yo, just record yourself and just play it. That's your disclaimer up front.
Oh, is this a roof question? Hold, please.
Yeah. But yeah, and you know what? And Josh, you've seen it again. We're talking about how much the market has changed, but even just in the past 2 years, as I jokingly told somebody, it's like, as a buyer that was purchasing a home with an original roof from 1995, so we're talking 31 years old. I said, listen, I am trying to help you. I'm just giving you what it is. I said, and we're not in the market where we were 2 years ago, where you were giving up your first and your second child. You are waiving everything and paying $100,000 over ask, and and you're going to let the seller live there for another year for, those days are gone,
Right.
So with that being said, from a standpoint of just, working both sides of it, is that I feel, and you can correct if wrong, there is more leverage because I think the reality of where insurance is in Jersey alone is roofs is everything, and as
Let's talk to a seller directly. Like, your roof is 30 years old. Your buyer, just be truthful. Your buyer is or is not going to be able to get insurance for that house. Yes or no?
If you were my seller and I'm an attorney, and I'm going to look at you and just say, Josh, listen, like, expect that whoever's buying your house is going to be getting a mortgage. Part of the mortgage process is getting insurance. Part of the insurance process is making sure that everything is checked head to toe. The house does not have to be perfect, like buying a used car, as I say all the time. But the biggest non-negotiable right now is roofs and their guidelines and how old it is,
And by the way, guess why roofs are non-negotiable? Water. It just is what it all goes back to water, It's crazy.
And water and wind, I say it, so going back to when we pull these clue reports that show, what's happened in the past 5 years, water's number one for claims, wind is second. And wind, it's what happened Friday, so property damage, shingles, and roofs.
I had a client, they closed last week, and then, a 400,000 square foot tree fell right across their front yard into the neighbor's driveway. Didn't hit any of the houses, fortunately, but welcome to New Jersey, it's tough. And she called me the next day. I need a tree guy. I gave her to Hugo. You need a good tree guy. It's M&T Tree Guys, but New Jersey's become, I don't know. Well, it's always been a litigious state, but from an insurance perspective, everything is on point. So I had a file a couple weeks ago, and the buyers are like, look, I can't get insurance. I'm going to cancel the contract. And the seller's like, well, I don't want to pay for a new roof. I'm like, well, do you want to sell the house, or do you want to pay for a new roof? Yeah. Not sell the house or pay for a new roof. And it was that binary of a choice.
Yeah. And that's the conversation. I'll use this one client just literally last week as well too, that everyone is different. Every file is different. But in this one, I'm nobody's taking a roof that's 31 years old. No one will, you'll get a non-admitted carrier that will insure your house with a roof exclusion. So I'm going to insure everything but the roof, so that's why I say, do not be afraid whether, again, you're coming to me a week before closing because you forgot to have insurance, or even if you're out of attorney review, be confident. And that's where teamwork comes in. And that's where I think we're in a different market too, that the greed is gone. And now let's on both sides work collectively to make sure that all parties and everybody is happy and doing the right thing and can go to sleep at night. And so what I am seeing is that a lot, when it comes to the roofs, they're taking it back, saying, hey, look, I've called 5 different insurance agents. Either I can't get any quotes, or if they are, it's more money, or they're saying, hey, look, you're going to take a chance that by the time the inspection comes out, which is every carrier, 30 days, they send somebody out, they're going to drop you because the roof's not done.
So let's talk about that, right? So let's talk about the post-closed inspection, or the inspection. So it used to be, and again, I'm dating myself a little bit, we would close on a house, right? Buyer would have insurance from, Banana Insurance Company in Banana Town. And the inspector would come out anywhere from 5 to 35 days after the closing. The new homeowner, the former buyer, the new homeowner, right, then would get a letter in the mail and say, hey, by the way, congratulations, I represent, Banana Insurance Company, and you need to cut all these trees down on your property. And the buyer's like, what the hell? I don't have it. I just closed a house. I don't have 10 grand to cut these trees down. And that happened all the time. And we would warn people, by the way, it's not over till the insurance lady sings, right? Now, you guys seem to be doing things pre-close, AI, satellite imagery.
Yep.
Is it let's talk about the changes in technology when it comes to the insurance policy writing business.
Yeah. And you're right. Yeah. And and there are some carriers that, will still, I'll do my inspection a year down the line. I think this, trying to take shortcuts, or just, they might not be as strict, but most 99% of carriers, no matter who you're working with, it's within the first 30 days. And sometimes when I'm binding clients and closings next week, some carriers, your home will qualify for a self-inspection. So they're already getting a link saying, hey, look, when you move in, you have two options. You know, you have 2 weeks to do this yourself or we'll send somebody out, you know? And the reason being is just, you know, think about it this way, is that whether it's myself or someone getting insurance on the internet or calling up, you know, it's, you know, another carrier on the phone, clients are so much in trusting that the person on the other line is doing the right thing, you know? And we want to say, we hope that everyone is, you know, we all have licenses, we all have a career, and we're all here to make sure that we, you know, gain business and relationships. But, you know, it's very easy to maybe not ask certain questions or just kind of just go through things and whatnot. And so that's why, again, going back to how important insurance is now, is that it's all these little things. Like you said, it's the overhanging trees, you know? So when myself or any other insurance agent, clients should be aware that, hey, look, you can't just say, here's an address, I need insurance on this house. Because that's not the way that you're going to want to be underwritten. You know, there's so many questions, and you know, we ask for the inspection reports if needed. We take a look online, and I always point, prime example, at a house in Kingsburg, another area that's nobody wants to touch anymore right now. And I said, listen, I said, you know, so she's like, I want to make an offer on this house. How much is flood going to be? And then I said, hey, Josh, just a heads up. I don't know if this came up in your inspection report or anybody else, but the way that walkway is leading to the house, it wasn't concrete. It was like wooden pallets lifted. I was like, you're going to need to talk to the seller to replace that, because it might pass a CO, but that's a trip hazard to an insurance company, and everyone's going to put that on you. So it's just not making this a transactional business, you know, at the end of the day, because like you said, that inspection, and for the most part, I tell people, you know, if your house is newer per se, they'll probably just send somebody, you don't even know they're there. They're taking pictures of the outside of the house. You know, they're sending their roof up. There's AI imagery. They could pull permits to see when the last time electric was updated, the roof was done, just in case. Because and that's the thing, we can write anything behind this side just to get it through. You know, if I say, hey, roof is 2021, but an underwriter is looking at it as like, this is the oldest roof I've seen, and the last permit within the township was 25 years ago, you know, they're cross-referencing their data. And that's why it's so important, because, you know, the more claims or faulty information that's out there, the more it's going to hurt the consumers like us that are doing the right thing.
Right. So let's talk to a seller. Seller, I'm a seller. I lived in my house for 30 years, putting my house on the market next year, next spring, because now it's time to start planning for next year. And I do have sellers, right, getting ready for next year. So roof, my roof is original. It's 30 years old. Should I just replace it, Carlos? Is my buyer going to get insurance for this house?
I normally don't jump in that part. So that's where a trusted advisor and realtor. Yeah. So it's, you know, and that's what I say too. I think just within the past 2 years, it's becoming a hotter topic that I think that realtors are addressing this up front most of the time, you know. And sometimes I do get patched into these conversations, and just I'm the middle person here, but yeah, they should at least expect, say, hey, look, if I don't want to do this because all I care about is just downsizing and moving to Florida where insurance is worse, I'm willing to give a credit. Just at least if you're not going to address it, at least really prep your seller that you got to be willing to offer a credit, you know, and usually what I'm seeing, and Josh, you could maybe put it out there if you're seeing, is that usually like 50% of what a quote is being that's put out there, you know?
Yeah, it depends on the market, right? So you know, the Western markets from us, you know, I'd say Hopewell, Pennington have definitely slowed down a little bit. And I was talking to a seller last week. He's got a 40-year-old septic, right? He's got a 35-year-old roof. He said, but it's a 50-year roof. I'm thinking insurance companies don't care. And I said, look, if I were you, I'd price a new septic. I'd know where it goes. I'd have the engineering reports done. I wouldn't put it in necessarily, but I'd price it before I put my house on the market. And I said the same thing about the roof. I said, look, it's over 30 years old. There's no magic bullet for 50-year roofs. Like it doesn't really exist, you know? And he didn't like that. You know, he's like, well, my house is so nice. I'm thinking, like, the buyer cares. More importantly, you can't get insurance for these properties anymore. You know, like if you don't have can you insure a house that doesn't have a functioning septic?
No.
Thank you. So it's like, if you're a seller, it's gone is the market and the days of passing that on to the buyer and the buyer absorbing that financially, I think the market is at more of a stasis point and a more of a balance point. In some places, I think the buyers have the upper hand west of us in the western parts. And I've heard this even in Monmouth County, like in Howell in the western part of Monmouth County, the market has shifted a little bit towards buyers as well. So, when like a seller's prepping, it's like they're going to have to face the truth, which is the insurance, adjuster who's going to go, all right, look, this roof is 30 years old. No, thanks. We're not insuring it. And then the buyer's like, well, I can't afford it. I'm writing all these checks to buy the house.
Yeah.
Something's got to give,
And I think that's where it's just, and that's what I mentioned as well too. It's having seasoned parties on both sides that are just understanding and understand the market and have gone through it, because I think that's where it's coming to. And for the most part, the same way insurance is changing, I'm seeing both sides of transactions when I'm thrown in there, and I'm CC'd on a lot of emails that, for the most part, I think everyone is understanding and finally getting it per se. Right. One of the biggest things
go ahead.
One of the biggest things, that when I'm explaining the whole roof, for instance, to clients is they're saying, well, I just got a home inspection. And so, and this is my biggest thing too, for anybody out there that's listening as well, is that a home inspection is completely different from the insurance inspection process. As you know, a home inspection process is hours, very detailed, thorough. You're getting a beautiful report. Click on hyperlink, it'll take you exactly where you need to be. And the post-closing insurance inspection process is completely different. And so when it's reverting back to the bigger things like a roof, for instance, per se, they're very vague. They are not licensed roofers. And so they will just give, most of the time, just saying approximate year of roof is 20 years old, no sign of water damage, roof has another 10 years of life, And so, so now I'm working with a buyer, saying, well, this is on my inspection report. And a seller sometimes are quick to say, well, nothing's noted on the inspection report. But that's where it's like, hey, look, insurance is different. They're protecting themselves down the line. So that's where it still comes back to, again, just knowing the market, and as far as just it's changing and what carriers will and will not insure. I will say, with this being the biggest thing as well too, is that, roofing is changing as well too. For instance, slate is expensive, but you will get 50 years out of a slate roof.
Right. Slate roof, not asphalt.
Yeah.
So what are some other things on, from your end? Let's, like other not big ticket items, other hot button items, like you're like, oh, like when you see it come across your desk, you're kind of like, shit, like knob and tube wiring, old electrical boxes, trees, roofs. What else?
Dude, you just nailed it all.
Those are the big ones.
You just nailed it all. Yeah, knob and tube is big, and also too, and these are more one-offs now. Because sometimes I'll get a cancellation letter, and I'll get a cancellation letter, and I'm looking at, hey, like, what's going on here, and they'll say, Pushmatic is still around in some of these homes, and so for those that are out there too, Pushmatic is an older, type of electrical circuit box that is a very big fire hazard and can handle more than 100 amps, for instance, and for most has to be at least 200 amps. So clearly the house is standing or not, but this is very outdated, so I think it's, we play such a critical role on both sides of the transaction, and it's easier for us to tell the buyers, but they're halfway through the contract. So now it's going back to the seller the same way the buyer's doing, their home inspection. It goes back to the whole prepping to list a house and kind of knowing what may come up of a buyer of your house. Because sometimes, again, you might have somebody that's an original owner from a house from 1950 still, and they've never updated anything. They still have, the plastic on the couches,
right.
And so,
well, the issue is, right, a seller of a house goes, okay, well, my neighbor sold for 700,000, $1 million, $2 million, right? I want that for my house. And well, the problem is your neighbor has a new roof, new kitchen, new baths, new electric, new plumbing, new sewer line, new septic, whatever. We can't even get your house insured.
Yeah.
Right. And that happened to a friend of mine. He got his insurance back, but like they had a spot. They did like a spot inspection of his house, the insurance company. and they noticed trees growing over the house. So I don't know if they just like flew a plane over this thing or drove by or whatever. He got a letter and he had to cut all these trees back. Like it was like completely random. He had been living in it for 10 years, you know? So there seems to be such a push by the insurance companies to mitigate risk, you know, but the issue is it only comes up when you go to sell your house. What are common maintenance things that you would tell a homeowner to look at? Obviously, anything related to water, right? Gutters, roofs, windows. What else?
So trees are huge because, again, you know, trees, and let's just use, again, it's all fresh in our head. You know, less than a week ago, what happened, you know, Friday night, you know, that some towns got hit with tornadoes, you know. So that's the biggest thing, you know, because from an insurance standpoint, overhanging trees, I mean, you can have a tree that's outside your house that it's not overhanging. If it falls, there's a good chance it won't hit the house. So that's something to address during the listing process, during the buying process as well, too. Hey, look, you got to take care of this. Your insurance, and sellers are very quick to say, well, I have insurance and it's not a problem, you know, because again, they got it 10 years ago and maybe a spot check. Spot checks do happen, guys, you know, just so you know as well, too.
They do. It's incredible. And again, I don't remember that 10 years ago. These seems to be a new thing where, you know, these insurance companies are going, you know, you bought the house 10 years ago. Let's check on it. You know, you need a new roof, get a new roof or you're canceled. Cut this tree back or you can't. Like, it's really amazing the level of detail that these insurance companies are going to protect their asset.
You know my analogy that I use? It's like having a car that you financed or that you've owned. You know, you're not leasing, trading it in. What do you have to do every couple of years? Bring it back to DMV to be inspected, to make sure that your car is up to code and it's safe to be on the road and for yourself as well, too. Doesn't pose any risks, you know? So think of it that way as well, too, is that these insurance companies, they have to protect their own assets and make sure, hey, look, is everything up to code? So overhanging trees are one of the biggest things as well, too. This one, I go to bat and I fight a lot because sometimes some carriers are very nitpicky, but they uneven sidewalks and driveways, because anybody that has an insurance policy, you know, coverage D is personal liability. You know, and it's, you know, you should be at least at 500,000 or at least $1 million. But that big number over there sounds like a lot, but it's minuscule of amount of a coverage to pay for. But that covers any slip and fall on your property.
Right.
You know, and so from an insurance standpoint, if you have a sidewalk that has unearthed and it's just like this now, and they did a spot check or even initial up front, you know, imagine you're walking your dog and you're not paying attention and you trip and you fall and you break your leg. You know, we are in a very sue happy country, no matter what state you live in, unfortunately, you know, and insurance companies are very aware of that. So they're even taking it now to the point where, like, hey, look, if it's not, I mean, like I said, they measure it out. If it's a little too uneven, they're going to ask you to replace that piece of your sidewalk or your driveway and level it out, because the last thing they want is a slip and fall in a lawsuit. And now they're paying out this $500,000. Right. And it's funny. So I tell clients, an umbrella policy is great because it's an extra added level of coverage. But if you got somebody that's trying to sue you, and once their lawyer finds out an umbrella policy, they're going to wipe out that $500,000 on your policy or $1 million to get to that umbrella, you know? So little things like that we might not think about, you know, not having railings, you know, if you have 3 steps going into your front, you know, and these things should be caught, you know, to get a CO, but sometimes they're missed or you're not getting the CO in time, you know, because it's an escrow and they say, we'll get it later. And now it falls on you. So, you know, the electrical is big, making sure that's updated, overhanging trees, railings on porches and decks. I tell everybody as well, too, as much as, you know, we are spending more time outside of our house and people are investing heavily into beautiful in-ground pools, slides and diving boards are the biggest insurance risk. And if, you know, you want to be Michael Phelps, go sign up at your local Y. Carriers will do it. It's going to come at a premium. But you're going to knock yourself out of the run with a lot of insurance carriers because, you know, having that type of apparatus, someone can get hurt on your property. It's another lawsuit. So right. Going back to just, as I say it, insurance isn't about how perfect of a buyer you are, how beautiful your home is, and how much memories you're going to make. It's the risk behind it of what can happen based off of that big oak tree that's been there for 40 years. Yeah.
Right. And it's not only the risk, but like I do think since Florida, since the Pacific Palisades, since the weather events that have happened in Florida, Superstorm Sandy, all these different things in the last, let's just say 10, 15 years, the insurance market's compressed, right? The insurance companies are like, look, we're just not interested in that business if the consumer, the homeowner, can't hit these standards. And then, these cancellation letters start popping out, or they get spot inspected and the trees have to go, or the roof has to get replaced, or the fact that, you closed 10 years ago and the roof was 20 years old. And then 10 years later, you're still with that same insurance company. And they're like, hey man, did you replace the roof? Oh, you didn't replace it? All right, we're going to cancel your policy. Like, these are big deals because God forbid the day after it gets canceled, something bad happens. That's catastrophically bad for that homeowner. Like, there's not enough money in the world to cover it, Yeah. So yeah, it's pretty interesting. How about old plumbing? Like, what if the house is old and it's got original plumbing? Is that a problem? I'm just going to grab a sip of water.
It is, so for instance, it's pretty much copper or nothing at this point. But I don't think I've come across a plumbing issue per se.
Okay. I was just curious because we deal with a lot of that out here, but I haven't seen that too much. So let's talk about vacant
even like
properties.
the older farm homes pre-1920, some part of it, with the piping that's coming in and out has at least been updated to copper, which should suffice. Yeah.
Right. So let's talk about vacant properties. I'm like, matter of fact, we're not even their broker, but we met a customer today who's selling, who wants to hire us to manage their 5-unit building, right, in Pennington. They're literally on the plane to California, I think, tonight. Their house is still for sale. I'm just thinking about it. I should have told them today. They have another broker for that, but I have to tell her tomorrow they have to get vacant home insurance. Like, let's talk about that.
Yeah. So yeah, you already got my mind going somewhere else conversation wise as well too. Yeah. So absolutely. And it's the little things that we just don't think about, like that too. And I've been in that situation as well where, clients are like, hey, look, like my house is listed. I'm living somewhere else, or, for whatever, out the country, renting, job assignment. You're absolutely right. Because if, if you have no insurance, or not the proper insurance, and something happens, then you're not going to be covered correctly. So prime example. So that's one example. So homeowners insurance has different levels. You have dwelling policies if you're a landlord, and you have vacant, which is, again, nobody's occupied. If you're not occupying your property in 30 days, then that's considered vacant from an insurance standpoint. At that point, if you do not have the correct coverage, which is, like you said, Josh, a vacant policy, and if God forbid something were to happen, yeah, then the insurance company, and again, they will come down and say, you have the right coverage. I'm sorry, I'm not covering you. And it's little things like that. So a vacant policy has theft and vandalism built into it, Well, theft is actually covered in homeowners, but it has the vandalism piece. Because again, after a while, if somebody's staking at your house, hey, look, I'm just going to steal your copper pipe and sell it on the street, or just or see what's inside for me,
Right.
So it's the little things like that we all need to kind of be on the same page, that there's the right coverage is out there. And that, where it happens a lot as well too, is if someone is purchasing a new house and they currently own a house and they're going to retain that house to rent. And that's one of the biggest ones I see as well too. So again, for anyone that's listening, that's out there, please try to remember this. And more important, please don't try to cut corners, because, just because you're getting a landlord policy right off the bat, kind of like what we were saying earlier, if people hear their home's in a flood zone, they get scared and they're like, oh my God, floods. That's not necessarily true all the time, but you got to do what's right. And if you need it, you need it. And so if you are going to keep your house and rent it out to someone else, the type of policy you have as a primary homeowner will not cover you when you rent it.
Right.
So
completely changes.
Yeah. You need to switch it to what's called a dwelling policy, and again, sometimes people are just like, I don't want to pay more, but every home is different, but a lot of times you don't. But if a claim or loss were to happen in that house and it is being rented to Josh, and now as me as the homeowner, I call up and just say, hey, look, I got a claim. They send somebody out there. Once they find out that you're not occupying that house, 50% of the time they will drop you right off the bat and say, I'm not going to pay out, or they might pay and then drop you. But either way, you're not set up properly. And in this market, most carriers will just say, hey, look, you don't have the right policy. We're not covering this. I'm sorry.
Right.
So that's,
and again, it's
that's
just,
one of the biggest things as well too, is to switch.
Yeah. And we're seeing that there's a lot of, with low rates, people are like, you know what, I'm not going to sell it. I'm going to rent it. Switch your insurance. Like, it's the first thing you should do. Call your insurance company. So let's talk to
Josh. Can I just throw one more thing in there too?
Yeah,
so,
of course.
So I swear I come upon this one a lot as well too, is, and again, this is where I put my mortgage hat on that I had before as well too. And I tell clients, hey, look, I'm here to get you to the closing table, but we're making sure we're doing it right. And I'm not going to disrupt your transaction. And one of the biggest things we see is clients that are buying home and renovating them right away. And now there's different levels of that. And what I mean is, you will have someone that's purchasing a house with the true intent to fix and flip. You know, their lender may or may not know it. A lot of times they don't know, but it's just, hey, look, I'm going to get the mortgage, sell an amount, and flip it a couple months down the line. Or you have someone that's saying, you know, I am going to do, you know, a renovation. I'm going to update the bathroom, this and that. So going back to just making sure you're with an insurance agent that's asking you these questions and not looking at a property and saying, here's a policy. Because going back, that's a big thing as well too, is that, you know, if you're telling me, Josh, yeah, I'm going to move into 123 Main Street, but before we move, my wife and I, we're just going to change the floors out, do painting, change some vanities and appliances, 30 days, I'll be done. I can comfortably say, okay, you know what? We're going to stick with the regular standard policy for you. During the inspection process, when somebody comes out, they'll notice that work is being done, and there's a good chance you'll receive a cancellation notice. That cancellation notice will say you have 30 days at this point to show proof that the work is done and you're moved in, which you will be. Perfectly fine. But then you have other, you know, in diving deeper, you know, hey, look, yeah, I already have contractors lined up. This is gonna be a 3 or 4 month job. You know, I'm taking out a load bearing wall. I'm adding, that's a renovation at this point. And so I went with it today, you know, no names mentioned, but it's, I told the realtor and the loan officer that if your client wants to take a shortcut, they'll take a shortcut, you know, but in something like this, if they are going to heavily invest knowing they're going to flip a property, you know, they need to take the little extra time and investment at a little extra charge to make sure that they're getting the right policy. Because,
right.
You know, if you're going to get a standard homeowner's policy, and if God forbid anything wrong with that work in that house, nobody knows that, you know, you were doing that work and you don't have the right policy, because there are policies for that. They're called vacant renovations.
I'm going to quote Glenn Ross. You see this watch, right? You see this watch? This is an Apple Watch. I literally bought insurance for this when I bought this stupid watch. Like, that's, I'm like, well, God forbid, you know, God forbid.
It's
and
the
then,
littlest
you know,
things. Yeah.
It's the littlest thing. And like, if they, you know, everyone gets mad because the insurance companies are making money, and I get it, right? Like, I get it. They make a lot of money, but they spend a lot of money, and they're trying to prevent stupid things from happening to you in your house. So hang on, we do have a question. The question is,
what type of insurance should you have if you're undergoing full renovation and not living in the house?
so the question ties back to what you just said, Carlos. What kind of insurance should you have if you're not living in the house and doing a full renovation?
Yeah, so there's different types. So it's either it's called a vacant renovation loan or vacant renovation policy. And those are usually for shorter term projects, 3 to 6 months. And depending on what will happen next, we'll get you into those. And with the vacant renos, you do get your prorated amount back on the policy term. So as I tell clients, hey, look, you know, you know, it might be more than might be double than what you might pay on a normal policy. It's the only type of policy that will insure you correctly, and doing so right. Because, you know, and I when I break it down to clients, that when you're hiring a contractor, they have to have certain levels of insurance themselves. You know, they have to have a GL license and certain liabilities. But now if something were to go wrong in their house, the last thing that they're going to want to do is say, hey, look, I'm going to file a claim underneath my business. They don't have that. You know, so they're going to, you know, look at you and just say, hey, look, like, sorry, this messed up, you know, put on your insurance. They'll take care of it. And if you call and they're like, she's got a standard homeowner's policy, I didn't even know you weren't even living in the house. That's, you know, so when it comes to this, you know, just, as I said, nobody should be taking shortcuts, because anything and everything can happen, and you need the right type of policy. And then you have those clients that are doing longer ones, and they're builder's risk policies. You know, you're doing a full gut rental, you're doing an addition, you're knocking it down, and they you know, and these type of clients, they clearly understand that, hey, look, yeah, I'm not going to be living in this house whether they're going to sell it afterwards, rent it, or move in. Once you have that, it's a bigger job, then you need these builder's risks, and then you have to have separate liability policies. And it does come at a cost. And again, but it's not bad, and I think that's where it's lost, and people are so focused on price.
Well, I think what people have to realize is that the pressure on the federal side, right, for regulation, the pressure in New Jersey for regulation, and then the pressure that the insurance companies look, the fact that you have a heaving sidewalk in front of your house, someone is going to break their ankle. We don't want to pay for it. Fix it before you move in. Deal with it with the current homeowner before you buy it. If your roof leaks, it's not just the leak, right? It's the subroof. It's the master bedroom that gets destroyed. It's it's everything cascades down from there. So, there's so much pressure in the markets from these big and seemingly much more common natural disasters, right?
Yeah.
When Pacific Palisades fire happened, I'm like, oh man, that's going to affect our insurance market. When the towers fell in Florida, I'm like, that's going to, and I said at the time, now it's going to crush the Florida real estate market because insurance rates are going to spike. And lo and behold, that's exactly what happened. The single family market in Florida is very hot. It's the condo market because it's uninsurable.
Oh my
right?
God.
Not uninsurable, but pretty close. And not only that, but the HOAs have to have a huge reserve compared to what they did. So, and then Governor Murphy passed a law in New Jersey that said, look, the HOAs have to have more reserve and more insurance. So it's there's so many things happening at a macro level that when the buyer is looking to buy the house and they go, well, what do you mean I can't get insurance? The roof's only 20 years old. And the company's like, I don't really care, man. We're just not taking the risk. Or, 20 or 5 years later, the buyer gets a letter you didn't replace the roof? All right, check, please. And then the insurance company pulls their cover. It's so intense right now on the insurance side of the business. So let's end it with two questions, right? So talk to a homeowner specifically, right? What can they do to prevent claims against their insurance, to keep their rates low? What are the top three things that you see? Obviously, roofs, wind, trees.
Yeah.
Anything else?
You know what? It's very contradicting when I tell the clients too, and I say this, hopefully you remember this, but it's very easy to have a knee-jerk reaction when you see something, and a lot of the times it looks worse than what it really is. And so I always just say, hey, breathe, call me up, send me a picture, send me a video. I always say I'm not a claims adjuster. I cannot make any but I can point you in the right direction. And usually it leads to a couple of things: is get a quote first. Sometimes if it is a little severe, maybe speak to a public adjuster first before going directly to the insurance carrier. But a lot of the times claims, what you think is bad, it really isn't. And it's fixable on your end. And it's not to sit here and discourage clients from saying, well, what do I have insurance for? Because I hear that all the time. But it's the after that we've discovered in this past hour as well, is that it may have an adverse risk on you, Mm-hmm. And so sometimes you may have to think, hey, look, and I see it too. I had to go to an underwriter approval for a carrier today because claims were coming up on this property from the previous owner. And she's like, oh, we got a repeat offender. There's 5 claims in 5 years. But this is the funny part. And this is where I say too, is that she goes, and she's laughing on the phone, but a payout was $600, which means their deductible was $1,000. And when it was all said and done, they only get an extra $600, I don't want to say only, but still, $1,300. So it's the little things. If you can stomach it as a homeowner and look at the long-term repercussions of saying, am I going to pay more and hurt myself and possibly be dropped and then even restrict me from getting better rates from another carrier?
Or a buyer getting insurance when they want to buy my house.
What's that?
And a buyer getting insurance when they want to buy my house. These things have ripple effects in the market, So let's talk to buyers for a second.
Okay.
It used to be, right? This is the buying process. Secure the property, attorney review, get out a review, deposit, apply for your mortgage. Yes. Mortgage is obviously a very intense process. I understand a lot of Princeton's cash, fine, but let's just talk to the mortgage borrowers. they submit their W-2 72 times, in a 4-week period.
Updated pay stubs every hour. Yeah.
The same pay stubs 37 times. So, it's a 45-day closing, right? It used to be on the 40th day, we would go, oh, talk to Carlos, get your insurance. How soon after the contract comes out of attorney review should the buyer be reaching out to you for insurance?
All right. So everybody that's out there, let's make this the focal point. I think this is a great question to end with, and I'm going to answer in 2 parts over here. And I will stress this, and your team does a great job, and not giving you guys the kudos that you need to hear, but you guys are amazing. And a lot of my partners are the same way as well, is upfront. The same way that a client, starts the process with a realtor initially. Well, for a realtor, what's the first thing they do is they find a lender and they get a pre-approval. Because, if you want to go see a house, you're going to say, hey, look, are you pre-approved for this dollar amount? It's life. It's part of the circle of buying a house. And so I tell, all my loan officers, my realtors, is introduce myself or any other insurance agent upfront. Because going back to an hour and 10 minutes ago, the insurance game isn't $100 a month anymore. And there's so many different factors: the age of the house, the age of the roof, even just location. Because again, it's all about risk. Kind of like car insurance. Someone that's living in Princeton with the same exact car might have a different rate that somebody is living in Somerset, 5 miles down the road, just based off the zip code and the amount of claims and losses. So there's so much behind the scenes that may seem simple, which, hey, day 40 out of 45, I'm going to call insurance. No, it doesn't work that way. And the reason why I state that is, my analogy I always say too is like, insurance it's just like a fingerprint. No two policies are ever the same. And the interesting fact about that as well is that, part of my process is, I'm 40 carriers is a lot, but it gets filtered out very quickly based off of, the sales price, town, all that stuff. I could just, I can read like my top 5, in and out. But for instance, like a dwelling amount is always going to be different because everybody has different perspectives, how much the thing is going to cost to rebuild a house. And so with insurance, for some people, it plays a big role in obtaining a mortgage. Some people are just so tight on their debt to income ratios, and they're going based off of, hey, when I got my pre-approval, I told my loan officer, I'm looking in this area, but I'm not finding anything in this $500,000 price range. Now I'm in a $750,000 price range. I think I'm still good, but when a home increases, so does your insurance. And so if I was just scraping by and now I have debt to income ratios and I didn't know the insurance is going to be more too, that's why I would say it's always important to get us involved upfront, even when you're making offers. A lot of time you want to know what you're getting yourself into, what a payment's going to look like in a best case scenario. The same way that you can go to Zillow, Realtor, and you can see the 2025 taxes, you should be able to say how much is your flood insurance a month and homeowners to make sure that this payment's affordable. And knowing that every house is going to look different on you based off of so many different factors. And then the last piece that I'll kind of fast forward and lead to and stress over, get every insurance agent, upfront, and just give the time for yourself to do your due diligence and shop the market. Because what if, Carl, I don't like what you gave me, you don't want to feel pressured and rushed. And as I tell everybody, they just, let me see what you have on the table too. Let's review side by side, because I just want to be your advisor and help either way, And the biggest thing that I will, stress as well too, going to, okay, now where do we get involved? But now looking at a quote and getting a policy is, you don't want to cut yourself short. You don't want to sacrifice coverage for price. And I say that over and over, never do that. And because
you see this watch, I insured this watch for $30. I don't know what it was, but it was like, do you want the insurance? I'm like, yeah. Because the probability is that it's going to break. Same as your house. The probability is it's going to break.
And you might look at that reoccurring charge like, wow, what am I wasting? But then when it happens, you're like, thank God,
Thank God.
And,
thank God. Yeah.
And so one of the biggest things, and I'm sure every agent that is out there listening to this, is no matter who you're presenting, if it's one of my carriers, sometimes you get those clients that give pushback and just say, I did my online reviews, and everyone says that they're horrible at, claims or they don't pay out. And, I love these just because I can easily say it, truthfully, being on both sides of it, from a lender to an insurance agent, is when we sit there just in this world and we look, when we're looking at Yelp, for restaurants or travel recommendations, I mean, people are only putting the best up there, and a lot of times they have people that are just, feeding it to draw. Insurance it's not the, I tell you, it's not the sexy part of a transaction. Nobody thinks about it. People will say, I got a 3%
nobody
interest
wants to
rate,
think
and
about a tree
that's
falling
part of
through
their
their
mortgage.
window. Yeah, that's people don't want to think about a tree falling through their window. Like they don't want to think about the septic breaking, but it happens all the time.
And where I'm leading to is that's like, if somebody's going to say, okay, look, I'm going to take a look at this quote you gave me, but Carlos, look, these reviews are hard, and anybody will say that. But I say too, like insurance, we're in a service industry. No one is sitting in there, and saying, wow, this insurance carries the best. Like I got the best price. Like no one's going to take time to do that. They'll talk about what they ate, where they traveled, what car they got. But once something goes wrong, and that's why I would say, okay, show me these reviews. Oh, I had water damage in my basement and they declined my claim. Okay, did you have water backup? The bare bones of an insurance policy is boring, and it gets you nowhere. It's the optional endorsements that every insurance agent should be putting on there and presenting as an option, and then let's strip away. Let's give you the buffet and then turn it into an a la carte, and tell what you want out of this. But nobody should be chasing, hey, look, I got the cheapest price for you. That cheapest price comes with the cheapest service, which comes to these bad reviews. And if anybody looks at reviews, it's always related to, okay, let me see your policy. Oh, well, you weren't covered. So if you're out there, if you're listening, if you're just, and I get it, sometimes you have to make it work. But for the 99% of the time, you don't need to make it work to get a mortgage. Is never sacrifice, because that's where you're going to say, I should listen to Carlos. I really should have got water backup, for only an extra $20,000 of water backup in my basement for only $90 a year, $120 a year, $10 a month. I should have gotten service line.
Expensive
Now I have, it's little things, the root of a tree can grow into a sewer line and back it up. And if it's on your part of the property, your township's not coming and saying, I'll fix it. So that $15,000 repair, oh, wow, I should have got that coverage of $40 a year. That's it. So it's the little things that I say, really go through and just say, and break it down, dumb it down as much as you want. Your watch, your $5 coffee a week that you're getting, put that into your house, which is going to be the biggest investment. And every optional endorsement is going to be the biggest reason why there's going to be a claim.
Yep. And you don't want that sewer line back up in your house, by the way. That's a whole different problem. All right, we need to end it there. Carlos, thank you. I know this has been a really broad-ranging conversation. We've talked about national policy. We've talked about state policy. We talked directly about housing, individual houses to homeowners and home buyers. But again, these national policies and these state policies, even these local policies, affect homeowners and aspiring homeowners in our markets. And that's the point of the policy and property segment of the Wilton Report. So Carlos Iglesia, thank you for your time and your expertise. We appreciate you being here with us tonight. I know it's late. And for those of you, if you haven't subscribed, hit subscribe, and we'll see you back here again next week live on the Wilton Report. My name's Josh Wilton. Thanks, everybody.
Thanks, guys.